None. Next item.
C, approve the August 9th, 2023 meeting minutes.
Can I get a motion?
I'm moving to approve.
Okay, can I get a second?
Second by Clark Comer.
Okay. All those in favor? All those, okay. Ayes have it. I'm trying to get the technology here and sometimes we use it, sometimes we don't, so. Today, I guess we're using it, so. It passed. Next item, Madam Clerk.
D, unfinished business. There is none listed. Moving to item 1 under new business, presentation by the Department of Management and Budget on the results of fiscal year 2022 annual comprehensive financial report.
I'd like to welcome our Auditor General, Ms. Cora, her staff, who looks a little bit similar, like, looks like John, and also her guest. And Ms. Cora, could you introduce your staff and guests, please? Thank you.
Marcy Cora, Auditor General.
John Kellett, Audit Manager.
Welcome.
Yogesh Kisani, Deputy Chief Finance Officer, Management Budget.
Welcome.
Michael Bridges. I am the Director of Financial Reporting with Management and Budget.
Welcome.
We've had some difficulties trying to get this scheduled to come before you. So the information is from last year's ACFR. But Yogesh and Mike are going to go through their presentation, then following that would be our budget sensitive presentation.
Please proceed.
Good morning again. And once again, thank you very much, all commissioners, for giving us an opportunity to present this kind of, I call it act for highlight, even though it's a 10-month or 11-month old, but still is relevant. Because we are in a budget season right now and going through so many numbers. So having said that, let's go to, okay. What we are going to cover right on the screen, fund balance and so forth. These are the topics that we are going to cover. Again, anything new Steve comes up like an opioid settlement, I just added that just to, FYI this body, what's going on, latest news for opioid settlement and so forth. Can you move to the next slide, please? Fund balance, again, consistently, we have been increasing our general fund balance. And obviously it's went from 44 million did increase, and the majority was from, again, primarily attributed to a property tax increase last year, around $40 million. So at that point, we just ended up with a total fund balance, general fund 305 million, which was 276 million was unassigned. And I have a letter on the slide, probably a next slide will tell you how all those fund balance categories are listed. Again, we do say the third bullet is kind of county's total governmental funds. So it's not just general fund, but there are another 25, 30 governmental funds that we do it. So we just try to list that 845 million and increase 68.5 million.
I'm sorry, Commissioner Kleen has a question or comment.
Sorry.
Yeah, thank you, Mr. Chair. On fund balances. About 10 years ago, back in the bad old days of consent agreements with the state of Michigan, the commission passed a deficit elimination plan, ordinance, I should say, that quarterly, to keep fund balances under control, that quarterly fund balances would be adjusted and be zeroed out. And now I see we're running. So I don't know if Madam Auditor, if you remember that ordinance and how it may play in here. Have we forgotten about the ordinance and just decided, no, what are we doing?
The ordinance is still in effect. As far as the fund balances that they ended on the fiscal year, none of these required a deficit elimination plan to the state, but they would still be required to report to you. And maybe Mary can add on to.
Yeah.
No.
What was it?
I was looking for the ordinance section.
But the idea behind the ordinance was to keep those fund balances zeroed out throughout the year. As you remember, our little dalliance with the state of Michigan. And try to avoid further problems.
We can certainly check on that. I'm not, normally we do send out a quarterly projection report by our budget division. And that's what it should state that. I'm not sure with the last, when those report was
Okay,
submitted,
well-
so because of transition, but definitely we can certainly check with you.
All right, well, and I'll follow up on it too, and let's
Sure.
see where we're at with that. Thank you, Mr. Chair.
And Mary's on it unless she wants to comment.
Looking back at our records, last one I'm showing is from fiscal year 2020 to 2021. Where we received where we completed a deficit elimination plan analysis.
Hmm.
But we haven't received one since then.
Correct. So for fiscal year 22, we were not required to do DEP by state of Michigan. That's one of the reasons why we did not submit that DEP to the state.
Ms. Corey, you had something to comment?
No, I just want to add that, yes, Yogi's is correct with that. The two were internal service funds that had deficits, and those because of OPEB liability postings, and the other just revenue recognition. So they weren't required to submit a deficit elimination plan.
And Commissioner Clean, so answer your
And I'll
question.
just comment, I think the ordinance is separate from us reporting to the state. A deficit elimination plan. Our ordinance is internal. That with it, hopefully, we send then reports to the state going, no deficits, but it's a separate item. Thank you, Mr.
Thank you.
And I can get with Mary after the meeting. We can look for the prior ordinance that required a quarterly.
All righty. Okay, please proceed. Thank you.
Thank you. Can you move to the, slide number 4, yep. And this is where, again, how we categorize our fund balance, and again, this is required by our GASB standards. So non-spendable, normally 13.2, mainly is inventory and any prepaid expenses such as insurance and inventory that we have paid. Restricted fund balance is listed as all the bullets, health and welfare, obviously debt service, capital projects, roads. Roads, as you know, we have a lot of money from the, Act 51. So 100% are restricted. So that's where that engine of defense, public safety, and other restricted are so many other those governmental fund. Assigned fund balance, committed fund balance is we're trying to, disclose separately as a Third Circuit Court 11.4, and unassigned fund balance, as we just talked about, 276 million. Okay, can we move to the next slide? These are the fluctuation of our general fund. Again, general fund revenue did go up by almost 58.2 million, which is a 10.7%. And we have just listed out the 3 bullet, the primary reasons. Property tax revenue, again, went up by like 39.3 million. Again, this is a large extent to trace the recovery of home and businesses returning to pre-COVID conditions. So fiscal year 2022, I think we did not have a much more COVID impact, so to speak, from a financial perspective. Charges for services, again, as you can see, parking revenues, airport parking tax revenues did go back up to pre-COVID level. And a cigarette tax, those all were getting into a line. Rest of the other revenues are some of the miscellaneous revenue, and some of those revenues, again, we had to make an adjustment because of our wonderful GASB 84 that really changed the landscape of reporting, how we report certain fund balance revenues and everything in a governmental arena. Move to the next slide, please. These are the general fund expenditures, increased 22.5 million. And obviously other three bullets are listed. Judicial expenditures, and this is one of the reasons judicial and general government, the first two bullets, I just like to give you a little highlight. As you know, we are going through our new ERP system. You know, we are trying to revamp our chart of accounts, really modern chart of accounts in compliance with the state of Michigan. Not to say that we are not in compliance with state of Michigan right now, but we're trying to get it to like a 99%. So when we saw some of those reporting and how state is reporting versus general government versus judicial expenditure, some of the prosecutors. So we came to know and we just changed the reclassification here. So that's one of the reasons judicial expenditure versus general government. And these are the functions required by GASB and our GFOA, how government should classify those expenses. So that's where that third bullet is just compared to prior year. Public safety, and that's one of the reasons, as you know, in 2020 and 21, we had a luxury of using COVID CARES Act funding. So we were trying not to use general fund, but we were trying to give a priority to use the CARES Act funding. And that's why there was less expenses, public safety on a general fund side, and we were using CARES Act. So at this point in 2022, we didn't have that much money left for CARES Act. I think it was only 6 or 7 million that we used for public safety only. So that's one of the reasons why general fund did go up for public safety. Can we go to the next slide, please? Slide 7. This is overall our debt. And we are very strong on our debt side. As you can see, our capability, we can issue a $6.6 million statutory debt limit, but we are way down on our debt. And at this point, I do not believe any major debt is on the horizon, except we just issue like SRF, state revolving fund, 1 million or something around 2 million. For our drains or sewer. So at this point, we don't have any plan to issue a debt. And the last bullet is always our great accomplishment, along with this body as well as our administration, that for the last 7 years we have consistently gone up for our rating agencies. We are literally enjoying an A grade at this point. And by the way, we are still working for this year's with the rating agencies to schedule other appointments, with our presentation with all 3 agencies. Hope to get somewhere up, but again, let's keep our finger crossed. Slide number 8, please. American Rescue Act. And this is, again, a little old information, but we still want to give a little historical perspective to give you guys, hey, 339 million originally that we received. Obviously, SLUR fund that we have utilized some of them. And still, there is a huge balance that we have to defer it. When we say defer means we did not earn. We had a cash, but we did not earn. So as of 2022, $350 million has been deferred. And as you know now, this year, there's a lot of discussion and there's a lot of projects has been encumbered, again, American Rescue Act from health and welfare and other departments. So as of 22, we did not have much. So only 0.8 million was a fund balance and $350 million, including there was some FEMA money there too. We were able to use some of the FEMA money, but again, FEMA had a lot of restrictions, that time restrictions, some facilities restrictions, and so forth. So, and we had a lot of other funding in there. So FEMA money was $32 million. I'm sorry. That was an emergency rental assistance. And I think we have done an excellent job to help out I believe so. We have used all the 32, and if it's not, then only $1 or $2 million was left after fiscal 22. But we can certainly provide that information to you for the ERAP program. Okay. Can we move to the slide 9, opioid settlement? Sorry.
Commissioner Coleman, do you have a comment or question?
Okay, so didn't we save or put in a different account the remaining opera funds? The ones that were not spent or not?
Right. So thank you, Commissioner. Yes, so there's a separate fund for ARPA, American Rescue Plan Act, right?
Okay.
So money is always stays there. You know, depends on all the projects gets in, which are again eligible under for American Rescue Act. Then that's been encumbered into that fund. So anything is not used, we defer. That means we didn't earn, so it goes to next year's. That's where we have a $350 million as of 2022. Did I answer your question, Commissioner?
Not.
Which would explain why there's only a $0.8 million at the end of
Which is
twenty
what I was
twenty-two. Because the
questioning.
money was moved out of the ARPA fund.
Oh, I see. So
Yeah, it's-
so
that-
that 0.8
0.8
million
is all-
remains.
Right.
And where did the money, where are we accounting for that money?
It was where we took the ARPA
I know,
funds
we
and
took it.
to the general fund. So now and you can help me, the ARPA dollars are now general fund dollars.
It's
to
a
be spent.
separate money in a special revenue fund. Again, there's a restriction, we can't just use for a general fund. So it's sitting in a separate fund in a special revenue fund category. Yes.
But it still can only be used
Yeah.
for
Yes.
the opera projects.
Because of the
Yes. And it's a very, I would say, very wide definition. So many healthcare projects are there. So many other projects, infrastructure projects are there that I think administration is working on that for those projects. And I think a lot of projects are on the pipeline for that. We just want to make sure that we use this full funding and not to give back to the Fed.
Right. So, right, I recognize why we did it. And how much money was it again that we set aside, that we moved?
I believe it was 190,
190?
190 million.
That's the number I remember, $190 million we encumbered kind of for the projects before even Congress was trying to pass a clawback. And I
Okay.
guess it did not get through, I believe so. So
All right,
Did that answer your question?
yes. Thank you.
Any further questions from commissioners? Okay, please proceed. Thank you.
thank you. Opioid settlement. This is really a good news about. So whatever so far we have received, $26 billion. Well, that was a total settlement in the government. No, sorry. You don't need to be here then.
Auditor General almost choked when you said that.
So overall 26 billion, but there were a few settlements. In fact, I just got an email 2 days back. I think there was a settlement with Walgreen again around some billions of dollars, and we were going to get some portion of that we still need to work out. But these were all overall on 18 years that we are going to get it, and it's around $29 million that over 18 years. And I have a very good spreadsheet, was done by our auditor. So how much we are going to get it each year, I have that spreadsheet listed.
Commissioner Clean had a question or comment?
Aren't these funds, when we get them, encumbered's not the right word, it's restricted funds? They're just not going into our general fund and we can
No.
spend them any way we want, right?
That's correct.
Okay, well, I
Commissioner.
won't get into what the
Right.
restrictions are today, but
That's correct.
we got to keep in mind that these are restricted funds
Yep.
for specific purposes.
Absolutely, and it's
Okay,
sitting,
thank you, Mr.
yeah,
Chair.
it's sitting in our health fund. That's one of the reasons. So, okay.
And to that point, we have a very talented individual doctorate level person dealing with the drug court downriver. And they, need some funding and they are dying to get it. The district court judge has been down here to meet with staff and nothing's happened. And this has been an ongoing project for to try to get the funding for how many months, Gracie? I'm sorry. Before Christmas. And they're really struggling. So if somebody would like to get with my staff or after this meeting, we'd love to have a conversation with you about that. And sure. And it's very restricted. And this one person, I think in the state of Michigan that has this doctorate level and dealing with those drug courts. And we're about to lose her. So thank you.
Sure.
Please proceed. I'm sorry.
No, that's okay. Thank you. Yes. And I'm sure our health department is Dr. Abdul Sayed is take care of those lot of programs under opioid settlement. So
But he knows about this one. So
move to the next slide, please. Yeah, this is a nice chart. As you can see, this all 18 years, how we are going to receive money. So just to state the fact, I think we did receive $850,000 a few weeks back, and I think that's for the 850,000, or it's just going around million, million two. And so you can see this chart, how we are going to receive this funding over 18 years. Move to the next slide, please. This is 2023 expectations, and we are in a month of August. So we are pretty much at the end of this fiscal year, 2023. But that's what the adapted budget contains. Again, some of the numbers are general fund, 608 million. That increased 31 million from 21-22. We always like to report what's general fund, general purpose, which was 427 million in 2023. And again, the third bullet is very important. That's what the state revenue sharing, 56 million. That's what we are expecting in current year. Obviously, it's going to go a little higher in 2024. I think we budgeted around 59 million. That's what when we get information from the state of Michigan. Can we move to the next slide, 2024? This is where I think is right now we are going through a budget hearings and so forth. So that's this numbers are coming from. As you can see, a first bullet again, general fund operating budget, 656 million did go up by 48 million compared to the previous slide. General fund, general purpose, 474 million. That's again, it's just an expectation. And as I just indicated, state revenue sharing 59.9. So obviously that's did go up by 3.5 million. So now I would turn over to Michael Bridges, who will go over through some charts and some other stuff. Thank you.
Thanks, Yogesh. I'm going to direct my eyes onto the slide because it's color. And that way, and I'm not sure, do you all have color handouts?
Black and white.
Okay, black and white, okay. Because I just wanted to point out, when you look at just what's before us right now, the summary of the governmental activities in terms of expenses, which we show in thousands. And I just wanted to highlight that what contributes largely to the 2022 expenses, largely we have judicial, which is 22% of the pie, and that's in green. And then we have public safety at 15% of the pie. That was about $120 million. Highway, streets, and roads, bridges, I should say, highway, streets, and bridges, that was about 15% of the pie. That's came to about $117 million. And largely health and welfare, health, human, veteran services largely was about 24% of the pie, coming in around about 190 million. And that's pretty much consistent with the prior year. If we can go to the next slide to take a look at the revenue mix of what contributes to our revenue by source. Largely, we have looking over to the left in purple would be the lion's share of our revenue source would be property taxes, about $350 million. And that's about 34% of the pie. And then next would be operating grants. That was about 336. And we kind of talked about the opera and some of the other funds that really contributed to that pot of or source of revenues, I should say. That's at 32%. And then we have charges for services that came in about 15% of the total, about 156 million. So those were the large sources of revenue that we ended with fiscal year 2022. If we can go to the next slide gives you a actual snapshot, because this is as of, well, two snapshots. What we present here is the county head count, and we actually present the head count as of September 30th, end of fiscal year. And then we kind of fast forward. We say, well, since September 30th, as Yoga said, we're now about 11 months away from where we ended. We wanted to take a look at 9 months as of June 30th, 2023, just to get a feel for what's been happening across the county in terms of our FTE count. First of all, if we take a look at just the September numbers, we actually reported total actual FTEs across the county of 2,692 compared to the budgeted FTEs of 4,000. So essentially we had a variance of 1,308 positions, if you will, that were vacant as of 9/30. But again, as we fast forward to June 30th, 9 months later, we actually show actual FTEs of 2,773. So we have actually a pickup of about 81 net positions, because along the way there were some terminations, there were some resignations, but largely if you look at the circuit court, there was from 9/30 to June 30th, there's about 11 FTEs that were increased for that set of operations. If you look at the county clerk's office, they actually picked up about 21 FTEs since 9/30. And if you go down the farther down the page, you have prosecutor's office. They were able to pick up 21 FTEs, and then if we go all the way down to the middle of the page is HHVS, Health, Human, Veteran Services, picked up about 26. So those four departments or operations, if you will, the county largely have been able to get recruits to fill those vacancies, but it's still a struggle. It's an ongoing struggle to really get the vacant positions filled, if you will. But this just offers you a snapshot of where we are.
And to that point on the snapshot, I think probably one of the biggest departments that has vacancies is the sheriff's department. And the thing of it is, overall, if this department talks to that department and this commissioner talks to that commissioner, at some point we should be able, rather than paying people overtime, and at some point, rather than the sheriff's having to use a FLMA so that they don't have to work the overtime, we should be able to come up to some common sense thing to be a little bit more than competitive with the largest county in the state to actually fill some of these positions. There's a lot of young people still looking to move ahead with their life. And I'm just saying, have you had any meetings with the personnel and the sheriff's department and others to try to resolve this? Or is this just my department does this and this department does that and this other department does that? Have we actually sat down and had a a reasoning meeting with the sheriffs and other departments?
I can respond to that, Commissioner.
Sure.
Very, very good question. And as you can see, I think this administration started, pursuing aggressively. I think there was just Career Service Day, I think 16th August last week in Dearborn. And before that, 1 or 2 career service, I think job fair that we conducted in a downtown. So overall, I think this is a top priority at this point. PHR is working diligently, looking at the, market rate, compensation survey, and other things are going. So basically, it says, yes, this is top of our list. But as you know, market is very competitive. And this remote versus in-person plays a role too. So yes, we definitely working on that. And I think we started hiring some of even in MNB, the 2 transitions, we lost some of them. So again, efforts are going on aggressively.
Is there numbers count of how we're working with the colleges and how many folks that are in like community college or Wayne State or whatever that we're getting any numbers out of them, or has there been any push to work with administrations in these colleges to see if we can find people that are getting educated that want to find a job, a career?
So I'm not aware of much more detail, but certainly PHR is pursuing with, I believe, so Wayne State as well as some of the community college. We can certainly give you some additional information.
Thank you very much. Appreciate that.
PHR.
Commissioner Clean has a comment or question.
Sure. Question, Mr. Chair. Thank you very much. So in 21-22, we budgeted for 4,000 jobs. In 22-23, we budgeted for 4091. And I believe in the proposed budget now, we're right around 4,000 FTEs. And there has been discussion about, and of course, we continue to run 1,300 vacancies. So we got 1,300 jobs out there that are paid for in the budget, but we're not filling those jobs. And the discussion has been, why don't we be a little more realistic and have a number more like 3,200, 3,300 and free up some money in the budget for other uses? What's been the nature of that discussion in MMB for approaching it that way?
So, yeah, so we continuously at this point, we are looking what's our vacancy savings, right? Some of the vacancy savings has been used by our consultants, right? When we don't have, we have resources scarce when we do a financial statement or when we prepare ERP. So there are certain things we use for that, but certainly there's some cost analysis is going on right now. CFO and our two new leaderships are working closely to look at this one. And again, this falls on a budget division. So they are working with our budget director as well as 2 CFO and CD Chief Deputy CFO are working to look at all our cost analysis at this point. So
as legislative branch, when you have 1,300 paid for vacancies, perhaps that's a petty cash fund. Perhaps that's we can reassign this to somewhere else. And I would rather see what they call it, transparency in budgeting. Okay. And so we assign that money right in the budget where we lower it. Commissioners know where it's going. Everybody, the public knows where it's going. But to have 1,300 jobs and fake it, and I'd hate to, if we multiply by, I don't know, 120,000 each for salary and benefits, that's running up into a big number of, what would you call it, undedicated dollars or something that can be moved somewhere else. So just for the honesty and the budgeting, so everybody knows what's going on, not to have that kind of extra dough just laying out there to move around wherever we need it. Well, why don't we just put it in the budget right from get-go? I'll just leave that as a comment. I know I'm not asking a response, but thank you, Mr. Chair.
Sure, I will definitely communicate with our budget team.
Thank you. Please proceed.
Okay, thank you. If we can go to the next slide. The next slide is actually a snapshot of the results of operations as it relates to the general fund. In particular, we show the revenues, we show expenditures, and then we show then below the line any transfers in, transfers out. We actually, as Yogesh communicated earlier, the revenues, and this is comparing, so you can visually see, comparing the revenues as it relates to fiscal year 22 compared to the previous fiscal year, which was fiscal year 21. The revenues actually, we reported $602 million compared to $544 million. And largely, as we communicated earlier, the largest increase would be related to property taxes by far. And then we don't break out the expenditures here, but total expenditures, we actually had $391 million that we ended and reported with compared to the previous year of 368. And then as we walk down the actual column, we show really a net operating of 44 million increase, which is what we pointed out when Yogesh was indicating the pickup for fund balance. And so then the previous year we had 260 million, and that's how we get to the 305 total fund balance. So we are, as far as our financial health, without a doubt, we are not in the black. We're in the black. We're not in the red. So far, so good. Can we go to the next slide? The next slide actually gives a trend analysis of just the general fund balances, 5 years from 22 to 2018. And if you look at just the total, the last line, total general fund across the years, and if you go from right to left, from 2018, we ended with $173 million fund balance. Then 2019, we increased to 182. Then 2020, we increased 191. And then 2021, we increased the fund balance, or increased up to 260 million. And just as we reported earlier, as of 9/30, we are reporting a fund balance of 305. So as you look through this slide, you'll see that over the last 5 years, we've been on a steadily incline in terms of increasing our fund balance, which is good in the context of our finances. Can we go to the next slide? Next slide is just actually a graphic depiction of just as like climbing up a mountain. Again, from 2018 all the way up to 2022, we have steadily been able to increase or show an increase in the county's fund balance for the general fund. Can we go to the next slide? Next slide, we wanted to just have everyone appreciate that as we go from audit to audit, as we go from closing the county's books as of September each year, and as the audit process begins, and it's a 6-month period from the time we and the process of closing our books from September to March, which is typically when the audit is completed, we are required as a governmental entity by the standards that the Government Finance Officers Association, or GASB, issues for us to adopt changes that would make for us to be required to report how we account for certain financial transactions. Along the way, we wanted to make you aware that these GASBs, of course, have actually made a difference in what we report. First GASB that we had to actually implement would be GASB 84. That GASB actually was implemented during the fiscal year 2021, or I should say as of 9/30/21, which was fiscal year prior to this period that we're reporting on. And that really required all governments to no longer just show really just what we call trust in agency as far as the balance sheet. It required all governments to really first communicate or determine what would be really a true fiduciary activity. And then once that was determined, you then had to determine or report out the actual revenues and expenditures. So that way the reader of the financial statements would be able to be a little bit more informed. It took us a while, and we're still struggling, frankly, because until we get to Oracle, the way we have things now through JD Edwards, I'll give you an example, like the clerk's office, they maintain a lot of fiduciary accounts, but a lot of what they're accounting for, they're keeping on a separate spreadsheet. And then we have to be able to do our due diligence with that information. Once we get to the new Oracle system, we'll be able to have all of that be included in the system, so that way it's easier to report on. So we've been able to determine the population, what the fiduciary activities are. So the good news is, as we step into fiscal year 23 and we determine where things stand as of 9/30/23, won't take a lot of effort to capture that information. And then I want to go to GASB 87. GASB 87 is the GASB that we actually had to implement for this year of presentation as of 9/30/2022. And that required us to, as well as all governments, account for all of our lease agreements that were more than a year in terms of terms. And so we actually had to determine what leases we had, so we could determine what the liability that we have for these leases. And then on the flip side, because as you are aware, we also are fortunate where because of the county being able to lease out a number of these spaces here in the Guardian building, for example, the GASB 87 also required us to capture the lease asset, so that we could make sure that we were properly reporting and accounting for what the true asset would be for the use of our facilities. So again, it took a lot of work last year because so many different county departments were handling certain leases that we had to kind of coordinate and get the effort going. So we at least established what the baseline is. So this year for 9/30/23, it's just a matter of just updating for any new agreements that would have occurred during this fiscal year. And the last bullet, which is the newest GASB, is called GASB 96. It deals with what we call subscription based information technology. In a nutshell, what that is getting at is that many governments for a number of years, like the county, we actually have a lot of agreements with different vendors where we're subscribing to use their software. And this licenses that, of course, are provided to the various county departments. If it's an agreement that's more than 1 year, then the new accounting requirements now is asking for us to account for that, so that we can actually, on the county's financial statements, show what the liability is for those subscriptions that are more than a year old, and then also show what we would call like a lease asset from a technology standpoint, or what we call intangibles. So it's like, as we use certain applications for a lot of things that we do within our operations, there's generally a fee that we are required to pay. And again, if it's more than a year or 2 years, then what they're asking us to do is go through those agreements and then come up with what the amounts are, and then be able to disclose that or report on that within the financial statements of the county.
And Commissioner Kleen has a comment or question.
Thank you, Mr. Chair. Yeah, on the GASB 84, that was a couple of fiscal years ago, right?
That is correct.
Was that the one that made us show our long-term debt, like retirement, in a different way on our balance sheets? Was that the one? Because it was a few years ago that change came.
So Commissioner, those came, I think you're referring to GSB 67, 68, those are retirement.
Retirement, yeah, okay.
Right, and then came 70. Right, so those were back then, those were not requirement to present in the body of the financial statement. We were just footnoting it. But now GSB came. And as I can see this, how GSB dealing with, basically they're trying to line all the government, same as a commercial enterprise. Any expenses, you can't just put off the books. Put it into the financial statement. And that's one of the, so what Michael just indicated about, these are our key challenges, whether it's accounting, I don't want to go into accounting detail, but this poses an operational challenges because this is where that get us to do all the historical information. And sometimes we struggle to get to the historical information from either department or elected offices. The latest one, GSB 96, again, it's an Oracle subscription base. Most of the technologies are now subscription based. You can't buy even Office 365 now. You have to have a subscription based technology. So that's how this changes, how the landscape is changing for this one.
Because the OPEB thing, that was big. That was a lot of dollars. That was huge. With 87 and 96 here, are these more? How many dollars are involved here? Is this just more smaller amounts but reporting them different ways and they won't really affect our finances, our financial statements too much? How would you characterize how big 87 and 96? Well, it's all big if we don't comply, but in terms of dollars.
Yeah, so 87, I think we did 1 year. The challenges with 87 is, right, back then, this operating lease versus capital lease. So all the copiers throughout the county, right, all the works on operating leases, because those are not. But then there was always a criteria were given, whether would you consider certain operating lease versus capital lease. It was easy for last 30 years. I've been following. That's what I passed my exams 30 years back, but now it's totally a different things. 96 and 87, again, those are sometimes it's a combined, whether it's a lease, whether it's an asset. So all the agreement needs to be very well, looked at that. And that's where sometimes we get our help from an auditor too and say, okay, this will fall on this side. And 87 particularly, county owns more than 200 buildings. And some of them are 200 years old. We can't find even the documents.
Right.
So I think that was a challenge, and I think we dealt with that very well.
We did.
Actually,
No doubt it's a challenge,
Right.
but I was kind of asking about the dollars involved here. How much does it really change our statements with these last two Gatsby's?
I think this two Gatsby's mainly, I would say, rather than dollar, I would say it's a reporting disclosure would be a much more changes than
Okay.
a dollar amount at this point.
So it really
I know.
doesn't hit our statements.
Well, it would, it would hit a statement. It would be a different disclosure though.
Okay.
It could be like in a government-wide wise versus fund statement. To me, at 96, I haven't had a chance to look at that, but whether this will affect the fund statement versus our full accrual at this point, I don't know.
All right. Thank you.
Thank you.
Mr. Chair.
I'm a little late in asking this question, but what's the status of the batch 3 on how much of the remaining ARPA funds is going to be allocated to like community projects?
I do not have that details at this point, but I can certainly find out from our health.
Sure. Thank you very much.
Absolutely. Yeah, sure.
I'm sorry. Actually, that's all I had, Yogesh, for our presentation. Did you want to end with?
Next slide is, again, definitely we would like to appreciate this legislative body to give us a opportunity to present this every year. And again, we work with audit committee, commission staff, auditor general, Mars Corey all the time. And obviously would like to thank our finance reporting team that this is going to be mine, 9th act for this year, 23. So
Well, Ms. Cora, please proceed.
I could just say, I know I've said it many times before at these meetings, but I think we need to commend these two individuals, Michael and Yogesh, for everything they've done to make sure that their primary responsibility is making sure that ACFR gets out on time. They spend many hours, days, nights, many meetings, and they should be commended for all their efforts that they've put into the ACFR. And we've already started setting up our kickoff meeting for the new one.
So, yeah, on behalf of, I'm sure I'm speaking for other commissioners too, but we appreciate the support and the teamwork and getting this delicate information back to actually the commission staff and also back to commissioners. So thank you very much for all your good support. Ms. Cora?
And you mentioned the teamwork. I think in all my years here, I've never seen our office and M&B work so well together on the financial statement audits. And I think that takes your efforts and our efforts combined.
We certainly appreciate that. Thank you.
Absolutely true.
We're all
Thank you
rowing
very much.
together.
Thanks, everyone.
Thank you very much. Yes,
Thank you.
indeed, true.
Anything further, Ms. Cora? Anything further, Ms. Cora?
That's all I have for that one.
Okay, anything further from our guest?
No, once again, thank you very much. And
Thank
much
you very much.
appreciated.
We appreciate it.
Thank
So can I get a motion to receive and file?
We don't do anything with that.
Oh, I'm
one.
sorry.
Now we're going to
Okay,
go
all right.
into our budget.
Okay, all
sensitive-
right.
we can
Okay, I'm
take it
sorry.
off the table.
Okay, sorry.
What you have before you today, this is our budget sensitive review of the September 30, 2022 annual comprehensive financial report. This is the presentation that was made for the kickoff of the budget hearings last week. We prepared this report for the Committee on Audit and the Committee on Ways and Means to capture budget sensitive issues which may have a budgetary impact on fiscal year 23-24 budget hearings. The scope of our report is from May 1st, 2022 to June 30th, 2023. And I'll go through this information rather quickly, but if you have any questions, just stop me as we go through it. Some of this we've already has been a repeat of based on Yogesh's presentation. First one's the general fund, which is on page 3 and 6 of the OAG report. Revenues increased by $58.2 million, largely to the higher property valuations and more user activity and public spending resulting from economic recovery from the pandemic. Our fund balance increased by $44.2 million over the prior year. Majority of the increase is unassigned. Unassigned fund balance also includes $23.9 billion for budget stabilization, which is consistent with prior years. Our total unassigned, as indicated in the report, is $276 million. And if you go to the actual report on page 3, there's a comparison table of the general fund revenues and expenditures. Our impact action item is commission leadership should request administration submit an annual report analyzing the cost of delivering mandated services and proposing service fee increases as deemed necessary. And commission leadership should continue to monitor the general fund balances and amounts allocated for budget stabilization. The first one's important, and we go back to many years ago when we did our food inspection audit, we determined that they had not increased the fees as food inspection for like 10 years. So we believe all these user fee activities should be looked at least annually to determine if we're capturing our costs and make sure our fees are in accordance to capture those costs, because you don't want to go 10 years and have to get a big increase to the users, or if you're doing it moderately as you go along, it'd be better for the users. Next one is our unassigned unrestricted fund deficits. We talked about this already. The CDBG and victim witnesses were just timing issues, and the other 4 funds, Chapter 8, Central Services, Environment, Building and Ground, these are just recorded the net pension obligations. So there was no deficit plan required to be submitted. Our impact action is to continue requesting periodic updates on the progress of eliminating existing fund deficits and notification of projected potential deficits and causing factors. And we have to remember too, throughout the year, a lot of the deficits quarterly could be the result of timing issues where revenues haven't been recognized. County debt and bond ratings. Bond ratings and outlooks improved since last year. All 3 rating agencies cited the county's sound fiscal management and successful operational restructuring. Moody's upgraded the county to an A1. Standards & Poor's rating remained the same as the prior year, which was an A rating with a stable outlook. And Fitch's rating upgraded from BBB+ to an A with a stable outlook. And then our impact action item was continued monitoring of bond ratings and request administration to continue providing communications regarding any changes in these ratings. Staffing shortages, overtime and succession planning, which is on through 9 through 12 of your OAG report, has been indicated. Headcount decreased by 90 from fiscal year 21 to fiscal year 22. However, headcount is up 81 as of June 30th, 2023. Overtime costs increased slightly by $1.7 million, totaling $24.9 million for fiscal year 2022. But actual overtime expenditures were under budget by $159,000. The sheriff's office accounts for 56% of the total overtime costs, which is because of the short vacancies in the sheriff's office. At the end of June 2023, the sheriff's office had 400 unfilled positions. And on page 10 of the actual report is a table of the staffing by elected officials, which is similar. We received the information from, which was presented earlier. Some of the recruiting efforts, there's a hiring blitz for JDF candidates, sample testing posted on the county website to reduce testing fail rates, satellite testing, on-site recruiting at Wayne County Community College, reimage your career branding campaigns. There's one-time retention efforts, one-time COVID payment stipends were made, CBA modifications allowing for wage increases, and also result of the Zone Commission's benefit task force. Many of the bargaining unit agreements have come to the committee with some of these benefit changes, and I think there's probably a few more left to come. Our impact action items is hiring and recruiting challenges continue. Some of the suggestions for the commission is a detailed and comprehensive compensation analysis, including pay and benefits for all positions within the county. A countywide what-if cost analysis of improved employee health benefit provisions, development and implementation of a means to monitor reasons for voluntary employee departures, continued updates on the status of staffing shortages, progress in hiring, continued periodic updates from personnel on implementation progress of recruiting retention efforts. Retirement system funding, which is on page 13 and 15 of the report. Currently, the retirement system is at a 65% funding ratio as of 9/30/2022, which they're in compliance with the Michigan Public Act 202 of 2017. County contributions exceeded the required minimum by $5.9 million. Some of the potential cash flow concerns is planned assets are sufficient to cover 100% of the employees' contributions on deposit and 70% of the future benefits to present retirees and beneficiaries. No funding available to cover employee match obligations.
Commissioner Clean has a comment or question.
Yeah, thank you. On the funding retirement system, we've been, I don't know how many years now, 3 or 4 years, 5 years, maybe putting in above and beyond our ARC, and it's brought us up to 65. As far as you know, Madam Auditor, is there a stated goal in terms of continuing this increased funding, and what percent do we want to get to before we don't? I mean, are we shooting at 80%? Is there a stated goal that we want to bring it up to with these extra payments annually?
Generally, the goal for retirement system would be 80% funded.
But has that been a stated goal that you know?
Not, I'm not aware. This, maybe somebody else has more information on.
That's what I've always heard was 80%.
Well, yeah, but that's the traditional one, but I didn't know
Yeah.
if there was a stated goal, we're gonna get to 75 and then we'll just continue to do our arcs and take it down slowly after that.
Sure.
If I may.
Sure.
Commissioner. Commissioner Clean, yeah, I don't know about the stated goal is, but since $5 million does helping us out
Oh,
at
yeah.
this point, and almost for last 7-8 years, we have been doing that. But I think, again, the 65% plays a role too, right? The market this year didn't do well versus last year in 2021. Market did an excellent. So our rate was it was still 65. So I don't know, but certainly we can have a little bit more information. We can discuss with our retirement folks as well as our administration.
Yeah, I think
Look at
it's because yeah, things do change, like you say, and we've been doing this 5-6 million a good thing, but at the expense of doing other things with that 5-6 million a year too. We've made a conscious choice to put in extra dollars there. So I'm just wondering how long we think we're going to continue that kind of funding. Like if we had a goal, we're going to get to 75% or whatever. So I better understand it now, Mr. Chair. So thank you.
So is the airport at 75%?
Airport, maybe I'm not aware of the airport. There's,
Last I heard,
There
this
were-
airport was at about 75.
Thank you. Okay, please proceed.
Want to move on So also there's a combined pre-2002 retiree liability. In 2017, the county Wickers and Wayne County Airport Authority entered into a retroactive memorandum of understanding to memorialize the Wayne County Airport Authority's 10.25% share retirement obligation for individuals employed by retired from the airport prior to 2002, when the airport became an authority. The MOU obligated the Wayne County Airport Authority to make payments totaling 22 million over a 5-year period ending September 30th, 2020. After which time the three parties would come to an agreement on settling the unfunded portion of the liability.
Can I jump in on that just a second? Our last full board, we voted to have the sheriffs use the airport authority's range with a cost to the county. But does the county not own the airport in a sense? So we're paying ourselves. So,
The airport is an authority, separate.
yeah,
authority.
so it's separate, but I'm saying, okay, but I'll let it go with that. Okay, never mind.
Then the impact is the commission leadership should request management's plan to resolve the outstanding retiree obligations from the airport. This is always a favorite. Delinquent tax revolving fund. $47.6 million increase in total fund net position over the prior years. So it's $203.3 million at 9/30/2022. 100% of the assets totaling $376 million are pledged as collateral for repayment of the tax revenue notes. 23.5 decrease in transfers to the general fund. Fiscal year 21, it was $3 million. In fiscal year 22, the transfers are $6.5 million. So simple analysis, cash investments plus expected future tax collections are sufficient to cover more than 100% of the outstanding delinquent tax notes, leaving over 221 million to cover any remaining obligations.
Can I jump on that for a question or for comment rather? The delinquent tax revolving funds, it shows that there's a decrease, correct? But is there also the offset of that, a balance in the estimated value of the properties in Wayne County? So it would make up for that?
It would depend on how much the treasurer determines is available to transfer to the general fund.
No, I'm not talking about that. I'm
Yeah.
talking about the value of the, oh yeah, I'm sorry, it would be a transfer, but the value of the housing and the buildings and stuff in Wayne County, I'm hearing is going up. So there might be, instead of it being overall be nice to have something to compare that to. If we lost 149.7 million, then if we gained 149.8, we could be a plus, correct? For a layperson trying to understand this.
It would go more back to the properties that go out to auction because you have your penalties and administrative fees, and that money is primarily what is used to with excess that can be transferred to the general fund. The regular increase in property value would have to do with your actual property revenue.
But I
Not
guess
your
if you look
transfers
at,
and
if you
delinquent
look at
tax.
macro, it seems like it's probably appreciating more than depreciating from the overall funding from the county. That makes sense?
Right, so you do have, as you always reported, and we also said, there is an increase in property tax revenue, which is a result of that.
That's right.
Yeah.
Thank you. Commissioner Flynn.
On this topic, the delinquent tax revolving fund, it's up to the treasurer to declare under the state law what's available. I don't know what they call it, excess funds or whatever to transfer to the county. Long a point of contention between the Guardian building here and the treasurer. I thought we had a didn't we set up like a committee to sit down with the treasurer and talk about so that everybody knows how that excess funds is calculated? Didn't we do that, madam?
We never set up a formal committee, and that's something we could look at this year to do.
But I thought we had discussions. I thought there was something that was going on to try to determine this.
We had discussions that the treasurer could provide the formula that he uses to determine.
That's as
what
far
the
as it's gone
surplus-
so far.
Mhm.
Okay,
And a
Thank
part
you.
of the problem is
Thank you.
too, because you have the status of what they need for their pending litigation as far as the Raphael case.
Thank you. Please proceed.
Okay. Next is our tax reverted properties transferred to the land bank. The Wayne County Treasurer Land Bank entered in an IGA where the Wayne County Treasurer would transfer tax reverted properties to the land bank. These are properties that are not sold at the first auction or the second auction, so they don't have a whole lot of value. And then part of the agreement is the county, the treasurer's office would provide funds to the land bank for maintenance of those properties. Expenditures incurred against this amount total $2.1 million. There's leaving about $681 of revenues in excess of expenditures that had not been spent as of September 30th, 2022 in the land bank. So our impact action wise, the commission should inquire what will be the disposition of the excess maintenance funds that are transferred and not expended in the fiscal year. And if that will determine whether the amount to be transferred the following year should be reduced. Going into the next one. Guardian Building First Street parking decks. The Guardian Building net operating income decreased from $731,000 in 2021 to $543,000 in fiscal year 2022 due to an increase in operating expenses recoverable from tenants. The building occupancy rate was $87.9 million at end of 2022 compared to 93.5 at the end of 2021. So our occupancy rate has decreased. First Street parking deck holds 1,461 spaces, of which excuse me, which 1,432 are in use at the end of 2022. It's an increase of 1,226 spaces. Commission leadership should continue to monitor the significant decreases in rent revenue, occupancy rates, and space lease to ensure stability in the post-pandemic times. And the monthly Guardian Building reports are currently being forwarded to the commission via Economic Development Committee. But they should also include the status of any collection of any past due rent. Next one is our American Rescue Plan Act funding. We pretty much went through this one. The county received $339 million in state and local fiscal recovery funds. Funding is required to be obligated by December 31st, 2024 and fully expended by December 31st, 2026. $190 million has been allocated to the county to use as revenue replacement for lost revenues. This is that transaction we were talking about earlier for lost revenues during the pandemic. Some impact action items. The commission should monitor the annual Wayne County Recovery Plan Performance Report to review the status of amounts spent compared to the amounts allocated to community projects. So that'd be for batch one and two, and also the workforce development.
Oh, I'm sorry, Commissioner Kling.
thank you, Mr. Chair. New terminology for me here, Madam Auditor. What the heck is the Wayne County Recovery Plan Performance Report? Never heard of that. Is that a formal report that goes to the state or goes to the feds?
I believe it's a formal report for the ARPA funds.
And who does that report go to? I would assume it would be to whoever sent us the money.
Right, the federal government.
So it exists. Okay, I had never heard. I don't know if our fiscal people see the Wayne County Recovery Plan Performance Report.
And the answer is no.
And we'll try and get a copy of it, find out more information on it, but I think what's key here is that the
Yeah.
M&B and Economic Development are reporting to the commission on the status of 1 and 2, how
Well,
much has actually been expended.
and that's the performance report, correct?
I would say not this performance report, but they should come to you with their own report specifically to the commission explaining where they are. And the community projects.
I agree with that, but you point directly to the Wayne County Recovery Plan Performance Report to review the status and the amounts compared to what was allocated to the community project. Well, we have to have that report in order to do a comparison.
Or they could use that report to provide their comparison to you. We'll find out, we'll get a copy of.
Well, and as always with these kinds of things, right? Well, we'll ask them for that report and then that never comes.
Well, what will happen is all these impact items will be sent to the fiscal advisor's office and they're included as part of the budget instructions.
Okay, all right, thanks, Mr. Chair.
Please proceed.
And number two, the status of unallocated amounts totaling $17 million to ensure the funds are obligated by December 31st, 2024. Then the usage of the remaining $190 million. And that concludes our budget sensitive report.
Thank you. Anything further?
No, this item does go to the full board for receipt and filing.
Okay, can I get a support? It's moved by Commissioner Clean and supported by Commissioner Kenizik.
Didn't hear me say that.
All those in favor?
I didn't second that motion.
I thought I seen you second it. Did you second it or not?
Believe none of what you said. Half of what you hear.
All those in favor?
It needs
Aye.
It needs a second.
All those opposed?
It needs a second.
You know, okay, let me just say this computer thing is not working. Every time I turn around, it's off, so I'm trying to do it vocally. So quite frankly, you might call it old school, but I want it manually so I can don't have to turn around and figure this out. So do I have a second?
You do.
All right, I've got a second from Commissioner Clark Coleman. So all those in favor now? Okay,
Are you voting yes,
okay,
Commissioner Basham?
okay, yes, and okay, so the ayes have it. Okay, next item, Madam Clerk.
F, such other matters as may be properly submitted before the committee.
There are none.
G, public comments.
Is there anybody from the public that would like to comment? Darcel, you got anything to say? Anything from anybody from the public that'd like to comment? Anybody from the public like to comment? Mary, anything? Nothing? Okay. Okay, next item, Madam Clerk.
Adjournment.
Can I get a motion on that one without hitting the computer? Okay, it's been moved by Commissioner Coleman and it is seconded by Commissioner Kenizik. So all those in favor?